Hello everyone, welcome to another video of FFL 24/7. Today's video is going to be about another stock analysis, and the analysis we are going to be doing is about the Alibaba stock. So why Alibaba stock? So this video is going to be for those of you guys who are holding Alibaba stock and or if you are planning to buy an Alibaba stock. So you might want to hear out these couple of very critical things that I want to share with you guys. So there is one warning, and then there is a little bit of a good sign of hope as well that I want to share with you guys. So let's get into the video and see what we are talking about. So this is obviously the very horrible looking chart of Alibaba that we are watching. So we peaked at around 330 on October 2020, and since then we have crashed all the way down to $58. So $58 is very critical for us. Why? I will tell you guys later. So the area of concerns, the area of importance that is going to be for us is this little area over here. So this area that starts from July 2023. So why? Let me zoom in and show you guys what I mean. So if you guys notice, I have these two trend lines. So these lines are a kind of a channel that Alibaba has been squeezed into since July 2023. So if you guys notice, Alibaba has been very comprehensively respecting these two trend lines. So it is nevertheless in a downward direction. Yes, we are taking a ladder down approach in this tight channel, and eventually we have even broken down below this. So we have even broken down this support. So there is a little bit of concern here. So if you guys have watched my previous video, we were around at this exact level of support and we saw a little bit of bounce, but I did warn you guys that the maximum we are gonna go is maybe around $78, but I am seeing more downside, and this is exactly what is happening right here. So let me zoom in and show you guys what I mean. So if you guys notice that this is another line of support that I have drawn, and based on the previous support that we have seen in the past on November 7 in 2022, so almost 1 year ago. So this support is not very strong support. I will warn you guys again. So they are just playing with the retail investors and just playing with, I think, our emotions or minds, whatever you want to call it. Because if you see this volume candle right here on October 16 on the earnings day, we did see a big sell-off happening, and RSI has been just selling all the way down as well. We are kind of in an oversold territory, which may signal that we may see some kind of relief rally or some kind of cool off happening. But the way things are looking for Alibaba stock is not so good for at least the time being. So why am I saying that? Because there are a couple of reasons. So even though their earnings were good, they did a double beat on earnings, and they did announce a dividend as well that we discussed in the last video, that if a company is giving back to the shareholders, they are giving the dividends of almost $1 a share. So that is a positive sign that the company has some extra funds that they are willing to give back to investors. But things are not looking so good otherwise, because the investors are taking a look at so many other things. Because what the market financialists and the institution investors, what they are looking at is they need to see a balance between the pricing power and the workers. So that is very important in 2024 for Alibaba stock. So Alibaba definitely has to do and maintain some efficiency in the way they are running the business. And not just that, if you have heard about Temu, and which is owned by PDD, if you have heard about them, so they are also threatening the online retail e-commerce space of Alibaba. So Temu, and they are actually kind of also competing with Amazon as well, even in the US. So that is another video that I will discuss in more details, but nevertheless they are also threatening the presence and mightiness of Alibaba even in China. So Alibaba is obviously having some supply chain issues, and they have some internal management issues going on as well. And recently Jack Ma, the co-founder, one of the very famous co-founder of Alibaba, he also did point out that they need some drastic changes and they need to correct the course of action for Alibaba in order to succeed and compete with the upcoming online retail giants, for Temu, for example, PDD. So, and based on that and all of this news, even though the earnings and the financial position of the company that the CEO has been telling us is in a very good position, but what I am seeing, they are trying to push us back down to $58. So why $58 is so important? So I want to tell you guys something, because if you look in the past, this is the exact bottom that we bounced from. So this, why they bounced from $58, because this was the historical very strong support of Alibaba. Because if you notice in the past, on September 2015 and February 2016 we did a double bottom on this support, and we did like a major bull run after that. So this is a very strong support that must be defended for Alibaba stock if there is any future left in this stock anyway. So this is obviously so there, you might be thinking that maybe they are trying to repeat the history and do this kind of double bottom again, and then maybe another bull run proceeds. So there is a possibility, but for now this is all just a speculation. So what we need to pay attention is these two trend lines. So obviously we have broken down below this trend line. So personally, as a trading opinion, so the tip, you please do not consider this as a financial advice, because this is just based on technical analysis and my personal opinion. So please do exercise caution when investing in the stock. So personally, if I would like to invest in Alibaba stock, since we are at this critical resistance and we have broken down this red trend line below. So if we do not hold this support of $71 and we did a close below this, then I think personally we are safe to buy puts heading back towards $58. This is where I see the stock is heading if we do not hold the $71 support. So we have satisfied the one major put condition. We've broken down below this downtrend line kind of support. We did not hold this, and this is the only last bit of hope left between $58 with this is which is $71. So if we are closing below $71, then I think it is very safe to say we are heading down back towards $58. And then again, there is a possibility they might be trying to form some kind of a similar double bottom around $58 that they did in the past in 2015 and 2016. So there is a possibility, but it is all just speculation for now, because US and China relations, they do seems to be normalizing since after the Chinese President Xi visited San Francisco in US and he met with Biden, and he did announce that China is not looking to participate in any wars. So that is kind of a good sign that the US and China relations might be normalizing a bit. So what I am seeing right now, so what is the price of action is, so this is what I am clearly seeing, that we have a kind of oversold on the RSI, but this does not mean we cannot go down even lower. So if the $71 support does not hold, then I think it is very safe to buy puts for $58. So, and obviously do not buy closer put, buy at least 6 months or 1 year apart, so you do have some time to play around and your premium just does not go all down to zero. And again, the stop loss is obviously going to be if we close back above this downward trend line, that is going to be our stop loss. So because this is what I am thinking, if they try, they are going to try this downtrend line again, and that is what I'm saying. We are going to be rejected at this trend line again, and we will crash down hard below the $71 and slowly head back towards the $58. This is what I'm seeing happening for Alibaba stock in the next coming days. So again, just to repeat, I think that this is a downtrend line that we are seeing. I am thinking they are going to try and hit this and get rejected and then come back down, and then we are just going to pierce through this $71 support, and $58 might be coming very soon. So, and again, for the bullish side, we have to definitely establish the $71 as a support and get back at least above this downtrend line, get back into this channel. Nevertheless, it is still a downward trading channel, but it is at least something that is providing us some basis of our trading analysis. So this is what I quickly wanted to share with you guys. If you guys like the video, please don't forget to like and subscribe to the channel.